Sean, we started this conversation off talking about the health scares that I've had and things that have happened to me recently. Can you talk a little bit about what drives you? What is your main thing that you're trying to get across in your company, or
Sure.
what types of things are you guided towards?
First off, glad to see you're doing better and on the mend and moving in a new direction here. I was actually in my 20s. I was one of those guys that I did work around the clock. I had a different business. It was a service business, just building software and websites, and you could call it an agency. And we were a job shop. So in other words, it was a lot of you would close a sale, you would serve that customer, provide a project, the project ends, and then your revenue ends for that project, which means you got to go find more projects.
Yeah.
And it was just rinse and repeat. It was a grind, and I hated the business model, but it was during the recession. And fortunately, 2010, a larger agency approached me and said, "Hey, you want to merge with us?" And I was like, "Oh, thank God. Yes, I need to get out of this thing." It wasn't like a big check was written. It was a situation where debts and liabilities were wiped clean. But yeah, I was in my upper 20s and I'm like, I am done with the whole grind lifestyle of an entrepreneur. And I decided work-life balance ever since. So
Mhm.
like you now, I place a high priority on work-life balance. And I mentioned this before we hit record, but with my current business, which is a software as a service business, and we help people invest in the stock market. But during the warmer months of the year, I'm based in Wisconsin. I do not work on Fridays. Fridays is for golf. And I cherish those moments. Anybody tries to take away golf day from me, ain't happening.
That's cool. So can you talk a little bit about what the work-life balance? It's so many people have work-life balances. That's what we strive toward. That's what we try to achieve. But what does it mean to you to have work-life balance?
So there's old phrase, are you living to work or working to live? And I would say I'm working to live. I really love what I'm doing. I love being an entrepreneur. I worked for quite a few large corporations, which was great experience, but did I want to do that for the rest of my life? The answer is no. So yeah, it's really having the freedom to do what I want. My team and I, we do work pretty hard, but yeah, again, Fridays are warmer months. That's golf. My wife and I do not work on weekends. Especially, I do not touch a computer or try not to touch a computer on Sundays at all. I need to
Mm.
shut my brain down and separate. And then we enjoy traveling. We'll take 1 to 2 trips per year. And that's something I won't give up as well. Like that.
Yeah.
Again, got to do it. Got to do it now. Cause I see
Yeah.
people, and you probably do too. They wait until they're like 65 and 70 or plus, and then they start traveling. But the problem is, you're too old to really be comfortable on a plane or in
Yeah.
hotels or anywhere outside of your home. And so they don't want to travel anymore. So they go on 2 trips and that's it. That's
Yeah.
not living.
Yeah. That I've seen so many people do that exact same thing. Like I've had grandparents, that's the way that they live their
Yeah.
life.
Yeah.
They pushed everything, and once they had time, it was too late to be able to really take advantage of it.
Yeah.
What does it mean to you? Like you were talking about, you don't pick up a computer on Sundays at all. Like so many entrepreneurs struggle with the being able to put work aside, and this is my time to do what I want to be
Yeah.
able to do, or concentrate on those things that I want to do. So I'm just curious, what does it mean to you to be able to have a life, have a job that you set aside and forget about for a while? Does that make sense?
It does. I can answer it in 2 ways. One is a more tactical approach or logical approach to why I don't work on weekends. And then I can give the reason why in a second. But my dad used to always say, do that which generates revenue first. And which means as an entrepreneur, you have to prioritize what actually generates revenue. And if you really look at all the tasks you do, over 90% do not produce revenue. So
Yeah.
why are you doing them in the first place? On weekends, when people are toiling, and I'll use that word capitalized, people are toiling away. They're checking email, they're maybe updating slide decks, and they're doing a lot of stuff that really doesn't produce revenue. You're not doing sales calls in most cases. There's no revenue generating or very little revenue generating behaviors. Why are you doing it in the first place? So I decided that I'm very strict on like creating a list. I use Google Sheets, and I literally list all the tasks I have to do and I rank them on what generates revenue and what doesn't. But that keeps me laser focused on what do I need to get done and what can I kick the can down
Yeah.
the road. On the why, it's like weekends, my wife and I, we always have something fun going on the weekends. I shouldn't say always, but usually there's something fun to do. So it's like, we're not giving that up. And it's, if I were to work anyway, what am I working on? So
Yeah.
if I get the choice, let's go have fun.
Yeah. That makes perfect sense. And you're right too, that so many entrepreneurs take whatever time they can to be able to achieve whatever they can and
Mhm.
accomplish whatever they can from a work perspective. Like they'll fill it with work, but not take time for themselves or
Yeah.
try to step away from the work at that
Mhm.
point. So talk a little bit about what you do.
Sure.
We've covered a lot of the mindset stuff, but let's talk a little bit
Sure.
about what you've done, what you chosen to do with your life.
Sure. Yeah. So I would pick up where my journey transitioned around 2010 or 11 when I got out of that agency. I said never again, never going back to that business model. And I kept that promise. The model I wanted to do at that point was SaaS, software as a service, something that's subscription based, creating that reoccurring revenue. And I didn't have any good ideas at the time. Like I was looking at like MailChimp and Salesforce, and even Netflix was around that transition point between the DVDs moving to the online platform it is today. And I'm like, gosh, those are brilliant platforms, but I didn't have a good idea. So I just, path of least resistance, I went to work for larger corporations. I planned to do that for 2 years. That turned into 12 years. But I tried a few startups along the way. A few of them failed. And at the same time, I got into investing in the stock market. And there was an aha moment in 2015 after a few years investing in the market. I was maybe keeping up with S&P 500. And I'm like, you know what? Warren Buffett and the late Charlie Munger were able to consistently beat the market. In fact,
Mhm.
Warren Buffett has stated if he were managing $10 million, he could make 50% per year. For comparison purposes, the S&P 500 is around 8 to 10%. So I'm like, whoa, that's pretty serious. 50% is nuts.
Yeah.
And I'm like,
And,
all right.
and just let all the mathematicians know that's $5 million out there. That's what you're saying you can make.
Oh, yeah, a lot of money. I can actually pull up a compound interest calculator, give you some ideas. I'll give you some raw numbers here, some fun numbers here in a second. But yeah, I was like totally laser focused on I can figure this out. And I'm a big math nerd. So I decided to create an Excel sheet, and I read a lot of books, went down the YouTube rabbit hole. And as you can imagine, and then your audience can imagine too, a lot of it's fluff. There's a lot of noise. It's a lot of over engineering and over complication. However, I found a guy by the name of Phil Town, and he wrote Rule One is one good book he wrote. Another one is Payback Time. He's got a third book. I think it's titled Invested. He wrote with his daughter, Danielle, but I didn't read it. I'm sure it's great, but he provided some of the calculus in his books. I'm like, okay. And I put it into Excel, and it made sense to me because it was highly rigorous. It was looking at like the revenue, the net income, the EPS, the free cash, the over the balance sheet, a few lines there too. And I'm like, he was looking at more than anybody else. To give you context there are a lot of analysts, even on Wall Street, that'll look at like market cap and PDE ratio, which end of the day, like you and I, we don't need to know these things. And it's not enough. It's not enough rigor. So back to this Excel sheet, I put it together. I then asked myself the question like, all right, I think I've got the math right, but I need a rating system that's easy to understand. And I was asking myself the question like, hey, what's the easiest to understand rating system around the world? I was like, you know what? The traffic light does a pretty good job. The whole green, yellow,
Yeah.
red is brilliant. It doesn't matter what language you speak or where you're based in the world, it's understandable. So I'm like, let's do that. So I created this system where stocks are either on sale, watch, or overpriced. That's green, gray, or red. I used it the next 4 to 5 years, making returns between 15 and 50%. So, with my own money, my actual money I was using. I wasn't just paper trading or testing.
Yeah.
And I decided in 2019, things came to a head. I'm like, let's share this with a few other retail investors, just regular guys like you and I. And everybody was like, you should turn this into a SaaS to share with others. And that was like, it's now 9-year journey to come up with an idea that might have some legs under it.
Yeah.
And that was a green light. It took a year to build the first version of Tykr, is the name of the business, Tykr, Tykr.com. And yeah, we went live in 20. Then it took 6 months to get first paying customer, which is how building software works. But yeah, fast forward to today, we have over 12,000 customers in about 50 countries. So this is what I get to do every day, is teach. It's a tool that's analytics and education all in one that makes it super easy to buy and sell stocks. And I get to build this business. It's a dream come true.
Yeah, that's very cool. There's so much here. And so let's start off with building a SaaS company and a stock company as well. I'm curious if like people from different countries are subscribing to the service or trying to get in with the SaaS. Does it work outside of the US as well? Or
It does, yeah. For transparency purposes there, our model is considered a screener or analytics platform. So we don't have to go through the regulations like a broker does. A broker is a broker dealer and they're managing people's money. For example, Robinhood, a solid company, great place to buy and sell stocks. They only really are regulated here in the States. So you can't be in like Germany or in the Netherlands and you join Robinhood. You got to join a broker in their country. Now with Tykr, 50% of our audience, give or take, is from the US. Second place is Canada. Third place is India. And then fourth, fifth, sixth, seventh is spread out over Europe. Like I think it's Germany, Netherlands, France, Spain. But then we've got customers in Australia, New Zealand, Indonesia, Philippines, South America. It's really cool that we can serve people all over the globe. And people, of course, you still need a broker in your country, but we are the perfect complement to a broker. That's a whole nother story, but we are now partnering with brokers as our scale strategy. Distribution took 5 years to get there, but that's the play. But yeah, you need a broker and you need a screener, and the 1-2 punch, like I use Schwab and Tykr to invest. You need both of them together.
yeah, that's incredible. Can you talk about your journey, what it was like to create a SaaS product? And you're still creating a SaaS product. You'll probably always be creating a SaaS product, but you said this was the year, I think it was 2019, you came up with the idea, and then what the development timeline looked like and time the first customer.
Sure.
Talk a little bit about that path, about that journey that you went through.
Yeah. So I'll give you the mindset first, and then we'll dive into the tactical strategy. But I knew around 2019, at this point in my career, I'm nearing 40, and I've really got two options. I can continue working corporate jobs, and I've worked based here in Wisconsin, worked for Kohler and GE, really good companies. And I'm like, I could pick one of those and just commit the next 20, 30 years or whatever.
Right.
And even though they're good companies, I'm like, that's not me. I want to build something. And I'm like, this is a come hell or high water situation. That's how I phrased it. I'm like, I am doing this now. And so I have to take action. I can't just sit and think about creating a SaaS. It's all right. So I got a few people interested. They want the Excel sheet. And I know the retail investor market is growing. And thanks to COVID, it accelerated even more. But I'm like, I got to do this. I love investing. There's very little tools out there. So there's a wider moat opportunity. That's a big thing with entrepreneurs, is you want to find an opportunity that has some competition, but not a lot of competition. Tykr, fortunately, we only have a few competitors and that's it. So yeah, it took a year to build. Now get this. I've got a lot of experience managing engineering teams. I did a lot of project management for corporations. And it actually took 3 teams that could execute on building a global SaaS. I'm like, I want a world-class SaaS. I don't want something that's small time. But yeah, the first 2 teams, they could barely build a SaaS. There's so many little details, especially with payments and subscriptions and like tiering up and tiering down and when you cancel, and so many nuances that were so foreign to the first 2 teams. It blew my mind. It's like we use a lot of analogies and metaphors at Tykr that are related to sports. Like It's like walking out on the football field, you forget your cleats. Like that's a fundamental thing you bring to the table. Whereas there are a lot of little nuances these teams were forgetting. Well, through a friend, they introduced me to a team that had built global SaaS businesses before. They're a little more expensive, but I'm like, I got to pull the trigger on this because again, if I'm going down this road, I have to commit. And yeah, I've been the same team now 4 years and they've done a great job, but it is really, I'm not kidding you. It is hard work to build a SaaS. There's so many nuances, the scalability as you add more users, you're going to have the scaling factor and the servers and then there's the marketing side, like the landing pages and the copy. Oh my gosh. I'm a process guy. I'm very analytical and I had to train my mindset to think like little marketing things like copywriting and SEO. I got really good at too. And then I do a lot of YouTube videos. I had to learn how to use YouTube to generate leads, which I had no idea how to do that. There's so many things I had to learn along the way.
Yeah. Yeah. No, that's interesting too. I don't think that I told you this before we started recording. Maybe you already knew this, but we have about 400 units or so that we managed. So very much so involved in the real estate space, personally involved in the real estate space. Sure. And I think that a lot of people think that's the only way that they have to make something of themselves is take whatever money that they have made in their, in their projects and put it into real estate hands off. So I'm curious what you say to that mindset that a lot of entrepreneurs or entrepreneurial people fall into. Does it make sense?
It does. What I look at and what I teach the Tykr audience is real estate is another vehicle. And it's great. And here's a fun statistic for you. I'm going to ask you a question here, but it relates to investing versus trading. We are at Tykr all about investing. So making money work for you, whereas trading, you are still trading your time for a paycheck. It's a lot of entering and exiting, buy and sell, buy and sell. It's a lot of waste. And 99% of traders do lose money. But here's a question for you. There are about 3,000 billionaires in the world today, maybe a little over. And of that 3,000, how many of them do you think are investors and how many of them do you think are traders?
I think most of them are probably investors, I think. Probably.
You are correct. There are 0 billionaire traders. And of the 3,000 billionaires in the world, they're a mix between real estate investors, stock investors, and entrepreneurs.
Interesting. Yeah. So in your experience in this industry, like, can you describe what it looks like, how to get started,
Sure.
how much you need to get started, explain that whole thing, what that looks like.
I'll get right down to the numbers right away. So Tykr is a B2C business to consumer SaaS. So we start at $15 a month or $99 a year. We have a 14-day free trial. There's also a 30-day refund policy. So if you do start paying, you don't like it, you just ask for a refund. And we're really big on education. So when you join, you get a welcome email with a few hot tips focused on completing your checklist, which can take you like a few minutes to get through. It's simple things like create your first watch list and set some alerts and go through your education. But we teach people in our educational emails after you join to get a new tip every day for about 30 days. And you can skip them and you can read them in all one go because the footer of the emails show like, you want to go here, go to our blog, you can read them all. But those articles cover things like how to invest your first $1,000 or when to buy, when to sell, how many stocks should you hold, how much should you invest from your income every month. Like it breaks all of those things down in simple terms. And we phrase it in the onboarding, which is you can go from beginner to confident investor in 14 days or less. And most people do achieve that because of the education. Just get right to the point, cut out the fluff, give people the essential information. And those books I was reading like this that were extremely boring and full of fluff, like there'll be none of that at Tykr.
Yeah, that's cool. That's cool. You have taken the mindset of the real estate investor, the 3-year-long trajectory, and converted that into what you would say is potentially 30 days. That's the liquidity that you have going into these projects. Am I right by that? Or is there further time that it takes to grow your wealth?
So this is one big benefit, and you're welcome to push back on me on this, but when I talk to people, well, real estate is great because you got appreciation of property and then you can create a recurring revenue stream from rent. For example, there's a multitude of real estate investors in the different models out there, fix and flips, and you can do syndicates and all that kind of stuff. But with stock investing, fortunately, you need an internet connection. You need a computer. Okay. So most people have those two things, and you need a broker. And brokers are free. Fortunately, you can join E-Trade, Robinhood, Schwab, Fidelity, the list goes on. Outside the States, there's a long list as well, but you can get into the market within 15 minutes if you really wanted to. You could join Tykr and be like, oh, I'm good to go. I'll go sign up for Robinhood, create my account, buy my first stock, and you're making money immediately. It is so fast to go from 0 to 60, metaphorically speaking, is crazy. Whereas real estate investing, as you know, there's a learning curve there and there's a lot of risks. You got to make sure you don't get the wrong property in the wrong location and whatnot. But with Tykr, it's like we cut out all the clutter. You can find really good stocks in seconds. We got an AI feature built in as well that saves even more time. And yeah, you can, again, 14 days is really conservative investment, but a lot of people you can be highly dangerous in a good way within a few minutes.
Yeah. And talk a little bit about the AI features that
Sure.
Tykr has available to it as well. I'll say that what I know of AI is very much along the lines of business, and it's doing things for you and make things easier and all of that. But I don't know if I would have the trust in AI to say, do my investing for me. What would you say to that?
You're right. You don't want an AI doing like everything for you. So your audience may laugh at this, you as well, but I am one of those guys I always say this, AI is smart, but it's really not that smart. And we created a tool in Tykr called the 4M Confidence Booster, and it's powered by OpenAI. But what it does is the 4Ms, I'll give them to you right now. You get the math parts, which is in Tykr, there's the summary, there's the score, and the margin of safety. That's all mathematical and they're all gamified. So they're very easy to understand. And you get the meaning. That's the second M. That's the business model. How does it make money? How many revenue streams does the business have? And how scalable are those revenue streams? Then you have the moat. Moat is how many competitors are there out there? You want a nice wide moat so you're harder to duplicate. And then the last M, that fourth M, is the management. That's the track record of the CEO. That first M, the math part, that's all automatic. But the other three, that can be highly manual. But we did 6 months of prompt engineering and we used a little mathematical rigor to keep it in what we call a swim lane to make it nice and tight so it doesn't go off the rails, which AI can do and be highly inaccurate. Mm-hmm. But yeah, we do that. We generate a 4M score. You can log in, you can see the average score because there's a crowdsourced average from our customers, but then you can go do a 4M on, let's say, NVIDIA. It'll take you about a minute, but it walks you through. It's interactive. It's fun. It's a cool experience, but it shows you the things you should be looking at on the journey. So think of it like Duolingo, but it's doing the work for you. I mean, we did put a patent on that. We're proud to say, but yeah, that took 6 months of prompt engineering to get it right. That was not easy.
Yeah, I can imagine. Can you talk a little bit about the cadence that you would have as an investor? So I know a lot of people that are interested in real estate investment, their cadence is potentially years before they're able to see any real type of returns or anything like that. So anything that they can use in their own life. With stock markets, with what you've said so far, potentially you can start seeing returns right away. So I'm curious, like how much money this is.
I'll break it down.
Yeah, this is a difficult situation because the more money that you have, the more that you can make. But I would say, let's take that into $60,000 a year. What is that weighed out for you?
I'm going to bring up, I've got a compound interest calculator in Excel. We'll soon add it to Tykr, but here's a fun number for you. So if you invest $100 per week, we're going to have a feature in Tykr because it's a nice, easy number, $100 per week, and you put it into an ETF, index fund, or mutual fund, which typically gets about 8 to 10% per year. And we call that wealth protection mode, not wealth building mode. Those tools, those bundled products are for when you're nearing retirement or in retirement. So there's too many 20-year-olds, 30-year-olds, and 40-year-olds, even younger 50-year-olds that are putting all their money into index funds, ETFs, and mutual funds. You get the wrong tool for the job. You want to be in individual stocks, Warren Buffett style. So here we go. $100 a week into funds, ETFs, index funds, and mutual funds. It will take you 35 years to create $1 million portfolio. With Tykr, if you're getting 15% per year, it will take you 24 years. And where a lot of customers, not everybody, we're seeing a lot of people push this, but closer to 25% per year, it will take you just 17 years to build $1 million portfolio if you're investing $100 a week. That cuts that 35 years from the funds completely in half.
Yeah.
And then, of course, you do the math there. I could play with another number here. Let's say you got a salary of, I'm just doing 100,000. You invest 10% or 10% of your income. So 10,000 a year, you will hit at 15%. It'll take you 20 years. And then it'll take you 15 years to get at 25%. But this is where numbers get real serious, is once you hit that million mark, numbers go crazy.
Yeah.
So at 25%, 15 years, it'll take you to get to $1 million. It's actually 1.2, but then you go another 4 or 5 years out, that 1.2 turns into 3.8.
That's crazy.
Yeah.
And so what does that equate out to? Because you're constantly revolving that money, I would say. So you have $1 million. You're reinvesting $1 million. Is that right?
No, you're fueling it. In this model here, it's 10,000 you're putting in a year. So 10% of an income, let's say it's 100,000. Okay. So you are funding it, but yeah, it's growing on itself. That's the one benefit I will say. Real estate, you're getting that residual, like whatever the rent is, or whatever dividend, whereas stocks, it's building on its own. It's one of those things we do train the discipline with our audience is you want to be in a position where you're not touching that. You're letting that build on its own. And then of course, I'm not the expert here. This is what I tell people, go to your tax expert and be like, all right, the withdrawals. And this is what I recommend. And a lot of financial advisors that use Tykr recommend this is try to move towards dividend stocks later in your life. So you don't have to sell shares and take a tax hit. You can simply keep the shares where they're at and pay yourself a dividend. And that's a great way to live your life. And that's exactly what my strategy is now. Like I have a few dividend paying stocks, but as time goes on, I'll probably shift more towards dividends. So it's, I don't have to sell any shares. I just let the value grow and I just get paid a quarterly dividend for holding them. So that's like real estate in a degree.
Yeah. But I would say the big difference is the amount that you have to put up to begin with. Cause like we have a fund as well. And the minimum investment for the fund is $50,000. It doesn't matter, 50,000, 100,000. Doesn't matter how much you put in, you're only going to make so much coming out. It makes a lot of sense from the feasibility standpoint to invest in stocks opposed to real estate.
Of two comments I'll make here that I tell real estate investors, and again, you can push back on this, is number one is the barrier to entry is significantly lower.
Yeah.
Because you can get in. All right. And you can buy fractional shares these days, which is okay. So you have $5 to invest into Apple. You can't buy a full share, but you can buy part share. You're off and running. There you go. You're making money, but with a $5 investment. Of course, I tell people try to buy whole shares. You don't have to. So that's one. And number two is real estate will appreciate, especially my home in the last few years has increased by quite a bit. It hasn't quite doubled, but it's where I'm at just west of Milwaukee in the suburbs, it's gone up. But the benefit is a business is a different animal because a business, for example, Microsoft, Apple, Alphabet, those are some businesses I actually invest in. The reason is they have multiple streams of revenue, sometimes up to 100 and 150 different streams. Real estate doesn't have that. Like one real estate property won't have 100 streams of revenue. And I'll just give you a few here with Microsoft to get people thinking tangibly. You have Microsoft Office 365, which we're all familiar with. You got Windows operating system. You've got Xbox, you've got Activision, you've got Dynamics 365, which is an enterprise software. Then you've got different computers. That's just a tip of the iceberg. And that's why a stock can appreciate significantly faster. Like a stock can go 100%, 200% per year. Will it do that every year? No. But you compare that to a property. Will a $300,000 property go to 600 in the next year? Probabilities are pretty low. A stock can do that because multiple streams of revenue.
Yeah, that makes sense. I'm curious, from what do you need to get started? What should you get started with? And I feel like this question also depends on how old you are too. If you're younger, you're going to need less money, or you can start with less money. If you're older, then you should start with more money. I feel like that's the right way to do it, but I'm curious if you have any suggestions there.
Yeah, you're right. And what we do is we tell people, ideally, you're going to be in a really good spot if you can invest between 15 and 30% of your monthly income. And it's the discipline of investing every month. But yeah, we are seeing a lot of college students. Of course, they don't have a big income at this stage in their life, but they're peppering in like maybe $100 a month. If they're working some restaurant job or bartending or whatever it is they're doing, they can usually set aside $100 a month, and that's training the discipline. But yeah, as you get your first job out of college, or let's say trades, I actually prefer people going into trade jobs these days because the starting line is so much sooner to put money in the market. Instead of a 4-year school, you can do 2-year trade or less and get to the starting line with investing much quicker. And then you're using compound interest because it's time in the market as opposed to timing the market. But yeah, 15 to 30%. And then we tell people, I'll give you the quick definition here between wealth building mode and wealth protection. If you're in wealth building mode, which means you're 5 years out or more to retirement, you want to be in about 10 to 15 stocks. For comparison purposes, Warren Buffett, he made his first million investing in about 10 businesses. So that's where you want to be. When you move towards retirement, in other words, you're 5 years out or less, then you can move to like maybe 15 to 30 stocks, ideally dividend stocks, or that's when you can make the move to ETFs, index funds, and mutual funds. And then I'll say one more thing here. I see too many people piling all in on their 401k. Even if you have an employer match, it's still a much slower vehicle because the 401k is going to get about 6, 8, maybe 10% per year. Whereas the stocks and Tykr, if a lot of our customers are 15% and up, again, no guarantees, but Tykr's in most cases, 9 out of 10 times, it's outpacing most 401k. So I tell people, all right, you get a match 401k, you're 27 years old, cool. Let's dial down the contribution up to the 401k and let's go outside your employer, get yourself a custodian, or not, you don't need a custodian account. That's for kids under 18. Get yourself a brokerage account and you can start building your wealth much faster. We've had a lot of people at Tykr do exactly that. They're like, Sean, my 401k from my employer, it gave me 3 options with mutual funds that are completely garbage. I just want to sell them outright and just use Tykr. I'm like, whatever you want to do.
One thing that you suggested there is you don't need to have hundreds of thousands, I'm saying, of stocks. You can do this with a handful of stocks. So you're not looking at 30, 40, you're not looking at all the stocks you possibly can. What does that look like from a deployment standpoint? What do you actually need to look at?
Yeah, so it's a fun challenge, you could say, because there are in Tykr today, we've got about 60,000 stocks. So it's like, all right, how do I find the best of the best? We have that whole on sale watch over price rating system. So that kind of narrows down the list to about 15% of the stocks in the market make it to on sale. All right. So we've got a good short list there. Let's take that even further. Now we take that 4M tool powered by AI and you can set all the screening criteria. Like you can create filters, you can save the filters and then go back to them every day. So you don't have to recreate them. But let's say your 4M score is 80 out of 100. Then it's going to take it down from, let's say, we went from 60,000 to maybe 2,000. We're going to go from 2,000 to about, let's say, 800. I'm just throwing out random numbers here, but it's like, all right, we got a shorter list now. And then we have another layer you can throw on that. We call this feature the 7. And what it does is it looks at the summary, the score, the margin of safety, and the 4M. So there's 4. It also looks at the 5-year returns, making sure it's beating the S&P 500. It also looks at the number one most important line on the financial statements is the EPS, earnings per share, essentially the profits of the company. We want to see 3 consecutive quarters that it's increasing because that's what large institutions look for. And then we want to see the earnings reports, which is you have your estimate and you reported, let's say the estimate is 90 cents and it comes out at $1. All right, it beat it. We want 3 consecutive quarters where it's beating the estimates. Get this and I'm going to have you take a guess here, but of the 7, to get a full score of 7 out of 60,000 stocks, how many stocks do you think can get to a max score of 7 out of 7 on that feature? Just take a guess.
We'll go somewhat low. We'll go 30.
You're pretty close. It's 20. It's usually around 20 and it's extremely rigorous and hard to do. So there are people that will literally just go log in a Tykr, go to the stocks page, filter by 7 out of 7. And within about 10 seconds, they got 20 really powerful stocks. And then I'm like, maybe back off the gas a little bit and just go 6 out of 7. And that'll move it to like maybe 50 to 100.
Yeah.
You get a few in there, but some of the usual suspects that have been in there recently, again, not financial advice, have been NVIDIA, as believe it or not, is incredible all around business. Incredible.
Yeah. And so you're touching on a different subject there where it's about doing all the research and all of that. I'm curious from your standpoint of these 20 stocks or 100 stocks that you're getting, what does that look like from a deployment strategy where you might go to Schwab, let's just say, and you have hundreds of them and you're trying to pick best ones, and this one is on an upswing and this one's on a downswing. What does that look like from a I guess investment strategy is the best way to be able to describe it.
Some of the language you're using there gets a little more granular, which dives in the world of timing the market. Like, all right, so I found, let's say 10 stocks. Now, what time of the day should I buy? Now we're splitting hairs. It's, there's the old rules of booking a flight. Should I book the flight on a Monday to get the best deal or Tuesdays or Wednesdays like that? There's a science there, but with stocks, you found 10 really strong stocks. Don't split hairs. Now it's time to I would do this. Start with 3 stocks and spread out. Let's say we'll use $900, $300 into each of those 3, and then get another 3 stocks and get yourself up to about 10 over. It doesn't have to be the first month, but let's say that over the first 2 months or 3 months, you want to get close to that 10 to 15 range. And then this is where self-discipline comes in, is keep investing into those same stocks. I've had friends that are like, Sean, there's so many good choices here. It's like going to Cheesecake Factory. You can have this and this. And now I got 50 stocks in my portfolio. I'm like, dude, you just create an ETF and the best you're going to do is maybe match the S&P 500. This one particular one was like, really? Yeah. You want to be focused. Warren Buffett had 10. You want to now sell you want overkill.
Yeah. I feel like that's the key, is knowing which ones I'm investing in and being steadfast with that investment. That's basically what Tykr does, is helps you weed out all of them that you can invest in to the ones that you should be investing in. Is that right?
It is. And you're going to get in most cases, again, no promises, but a really strong group of stocks. And there can be people that run into a situation where they're like, all right, I got 30. How do I get it down to 10? Again, don't split hairs on this. Like, you could prioritize by that 7 score, or maybe by that 4M score, or maybe by the historical returns. We know past performance does not guarantee future results, but you can pick your poison there. But it's like in most cases, like we've got a back testing feature in Tykr that shows like, get this, S&P 500 typically returns about 80% over 5 years. This back testing feature shows that on sale stocks with a 4M score of 70, not 80, but 70, and they're large cap, they typically, instead of 80%, they're closer to 250, 300%. Like just by shooting straight in the dark and grabbing on sale high 4M score stocks. And again, most cases, but not all, you're beating the market considerably. And I'll say one more thing here is there have been financial institutions that were like, is this too good to be true? And I get it. Like, okay, skepticism is like the top of the list. But now with all the customers leaving the reviews, and we're launching a new feature in Tykr that shows the actual returns of our customers, and it's going to show to everybody that uses Tykr so they see full transparency. Now institutions are starting to say, oh, we should probably use Tykr to create our clients' portfolios. And I'm like,
Yeah.
yes, you should.
Yeah, that's cool. That's cool. One last question, real quick.
Yep.
I'm curious, from the people that are doing well, you alluded to it a minute ago, but learning their recipe for how they're investing or what have you, what does that look like from a investment today? Like, I feel like that's one of the biggest things, the biggest challenges that you have with investors is knowing what to invest in. So if you have other people that are investing in a particular asset that you can piggyback off of, does Tykr do that too? Or
Okay, a lot of people are excited about a community feature we're going to be adding to Tykr, hopefully early 26, where you can follow your friends. When they make trades, you automatically get notified. Like it would say, hey, Matt just bought 5 shares of, name your stock.
yeah,
You can see the portfolios, you can see the weighted allocation. What we will do, and this is something I learned with behavioral psychology, is we won't show the dollar sizes of accounts. The reason, if somebody's a beginner and they have $100 in their portfolio, and then they see somebody else who's got $1 million, the person with $100 is going to feel like they don't belong.
Yeah.
That is typically, there might be some people are like, oh, something to aim for, but that's usually not the case. So we will keep dollar figures out of the equation and show what stocks you hold and your weighted allocation and your returns, but the numbers will be hidden there. And most people I've told that to are like a deep sigh of relief. Oh, okay. Yeah. You won't see my portfolio, but you can see that I hold, for example, like people, when they join today, you can see I hold Apple, I have Microsoft, NVIDIA. That's great. That transparency is what people actually care about, not the dollar size. So anyway,
that's interesting. Yeah, I feel like this is a topic that we can go on and on to talk about for hours. But if people want to learn more about you, your products, your services, what would be the way that you would say to reach out to them?
Yeah, Tykr is free to join. Just go to tykr.com. And then the other place if you want to get a hold of me outside of Tykr, you can go to LinkedIn. I'm very active on LinkedIn, and Sean is spelled the Sean Connery way.
Yeah, that's incredible. Yeah, I think that a lot of people that are invested in real estate should look at different types of opportunities. And this is another option for being able to diversify yourself.
Totally.
Yeah.
Yeah.
Cool. Excellent, Sean. Thank you very much.
Thank you, Matt. Appreciate it.